Hello, 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 everyone. So, welcome to the Wealthy Trustee Masterclass. Hi, hi, hi. I'm super excited that you guys are here. We have an amazing and phenomenal masterclass planned for you guys today. So, today we are going to be talking about real estate investing, specifically how to get creative financing for your real estate investments that you want to acquire. So I'm super excited to invite our guest speaker. His name is Cory Walker, and he is the founder of Omni Funding. And so he is going to come on and teach us about how we can get these different creative ways of actually getting financing for these real estate investments that we need. So some of you guys on here are trustees, so you can use these strategies with your trust to acquire those assets and investments. So tap in with Cory Walker. I'm super excited that he decided to come on and teach us about these creative strategies. It's not only about the traditional ways of getting these investment properties. So he's actually going to open our eyes, change our mindset into other ways of doing it. So without further ado, I do want to bring Cory Walker up. Thank you so much, Cory, for coming in, pouring into the community, and teaching us about how we can actually use OPM, other people's money, to acquire these assets. Cory, you have the floor.
Well, thank you so much, Christina, for the introduction. And I've been looking forward to speaking with you all. Christina talks about how, hungry this group is, and especially for this need for creative financing, using other people's money. And a little background about myself. Again, I'm Cory Walker. I'm the president and owner of Omni Funding Solutions. We are a private money firm. We also do a lot of brokering for some commercial and traditional lending. But our bread and butter is creative financing through private sources and business loans. So what we'll be talking about a little bit today is kind of a hybrid, okay? Because a lot of people, they don't really leverage everything that they have access to, or they may not know that they have. So someone here today that has an LLC, we'll kind of go over that. I can tell you how we can leverage that LLC and get some business funding to be creative in purchasing, investment properties such as DSCR loans, which is the main topic of the hour. So again, a little bit about myself. I've been in lending for 23 years. I've done every type of loan you can probably think of, from, VC, angel funding, Series A, Series B funding, as well as hard money. I'm a personal investor as well. Our fund is right now is about 3 million. And we do fix and flip, ground up, and construction loans, and some DSCR if we don't broker it out. So we have a plethora of different ways, and I have all this knowledge, and I'm just excited to share that with you. So without further ado, let's kind of get right to it here, because I want to make sure you guys got some Q&A time as well. So let's see. If y'all can see the screen, if you can let me know if you can see the screen.
Yes, we can.
All right, perfect. All righty. All right, so perfect. We're going to be talking about DSCR loans and business credit funding that I alluded to earlier. A little bit more about myself. Here's a picture of myself where this is when I was working in corporate America as a top performer in Arizona. I don't take lightly that to be on a billboard. I didn't pay for the billboard. This company made me a face of their company for my outstanding sales skills. So I've been pretty much number one everywhere I've been in corporate land and through contracted work. And this particular group, it was Freedom. I think they changed the name now, but they put me up there. I was up there for 6 months. And it was just basically a show of my talent and my work that I do. So I was up there 6 months, and that's a big deal coming from Arizona. So for someone to be looking like myself, you may not be from Arizona, but it's a little different out here. So that's kind of a big deal. So going into debt service cover ratio, DSCR loans. Some people may not, I don't know what level everyone's at, but I'm just going to go over some basic fundamentals here, and then we can really jump into the meat and potatoes of the subject. But just to cover a little bit of ground here, the debt service cover ratio is a measure of property's annual gross income against its annual mortgage debt, including principal, interest, taxes, and insurance, and HOA. So it's using the property's income to qualify the debt. So if you're an investor out there, you have a single family home, and your cash flow, say the property's worth 100 grand, just using simple numbers, you're making $1,000 on it. If your debt is 970, that means you're going to be over the 1-to-1 ratio. So that puts you in a very unique spot. However, I do have non-ratio programs as well that are under the normal 1.25%. How DSCR ratio differs from other loan matrices. The DSCR differs from other loan matrices by focusing specifically on the company's ability to cover the debt payments with its operating income rather than the collateral or just the credit score. So it's looking at just more than just the collateral and the actual credit score, and actually your income. It's more emphasis on the asset itself, and that's what makes it unique. DSCR became a little bit more popular, I would probably say, right at the end of the refi boom in like 2022. I started doing a lot of non-QM stuff. And so I was kind of ahead of the curve. Now it's not necessarily saturated. I'm seeing some markets actually cut down, and you used to be able to get, the norm was to get a DSCR loan at 80% loan to value. Now most lenders are 70 to 75%. However, on the private side, I'm able still to do 80% LTV on a cash out refinance on a DSCR loan. And the credit score minimum is down as well. I don't really advertise it, but sometimes through my private money source, we need a 660 score, and we're working on a new program where we can go lower than that. So that will open up a lot more channels for a lot more business for this product. However, if we're in the low sixes, then obviously your loan to value, you wouldn't get 80%. You're probably around 65 or 50%, which still is pretty good in this market. DSCR loans, who is it for? It's for people who want to get a mortgage based upon the cash flow from their investment property. This is a lot different than getting your normal based on your income. The normal type of loans, when you're dealing with Fannie, Freddie, and a lot of the others, you have to provide income. So this gives you a way to where you don't have to put show any tax returns or pay stubs. You can use the property as an asset base to qualify for the loan. Now, some of the pros of the DSCR loans are, you got diverse options. So I have customers that we could do portfolio loans. A lot of my seasoned investors and savvy investors, they like, bringing 5 and 10 different properties, refinancing them. I throw them on depending on their credit score. I have a DSCR product that I can do a 40-year interest only. So a lot of my investors, they like that. They like the diversification of the loan options. We do have interest only options as well. They like the fast funding. They like the flexible underwriting. It's not a lot of red tape. You figure the nuts and bolts of everything is just simply getting a lease agreement or rent roll, homeowners insurance, and maybe a mortgage statement. I mean, so it's not like you have a lot of tedious documents. So that's why, it's pretty favorable and becoming more and more popular. And I just think that the awareness from an investor standpoint is there. But I think for the masses, we need to understand how this product works and be able to utilize it, mostly effectively and efficiently. Now, some of the cons, you do have to have cash, right? Cash is king. And, that basically you have to have skin in the game. You're not going to get a product like this where, you can have a low FICO score and you still can get 75 to 80% either cash out or purchase a property. You have to have skin in the game. So one of the cons is you have to have cash reserve requirement. But most importantly, because I can get around the cash reserve requirement because it's not necessarily need to be seasoned. It can be from anyone, and it doesn't have to be documented. the down payment requirement, that's the equalizer, right? So that if you're thinking you can get a five, if you ain't really got money, then this probably is not the program. However, if you have the credit score, we're going to get into that because I can show you how to leverage for the people that can really, there's some people out here that can really seek out good deals. They just need to have the right resources and the creative mind in order to either JV or leverage some of the things they do have, such as a business, LLC, or corp, that I can kind of elaborate on for you guys. Now, the loan requirement, like I mentioned, in most instances, we're looking at loan to value of 80%. And I use small numbers. If it's a 100K loan that you're buying, or you're buying a $800,000 home, then you need 20% down. So, that puts us at, LTV of 80% in most instances. Roughly around 75, I would probably say, is the norm. This is for single multifamily unit properties up to 5 million. So depending on where you're at, I mean, obviously, in Arizona, I'm in Scottsdale. You can't get a 25 unit building or 50 unit building for like 5 million. It's not going to happen. But there may be some in different markets. I know you can definitely do that in Houston. Some places in the Midwest and down south, depending on where you guys are at. So we can go up to $5 million where you don't have to provide any financials. You just give me a rent roll and you get me a lease agreement, and you can qualify for that program. Now, the thing is, I love multifamily. Why? Because it really, really cash flows, right? So single family is cool, but if tenant doesn't pay, you may get late or delayed on your payment. But multifamily, you got many eggs in the basket. You got other units that can support the loan versus being stuck with one unit. So I really specialize in multifamily for you folks that are looking to that. Most of my portfolio personally is multifamily for that reason. So I'm kind of biased on that. And that's mostly from experience, from being in a situation where, you had a vacancy or tenant gave you some issues. But multifamily, if you got a 4-flex and one unit is not rented, you still can make the mortgage, still can cash flow in most instances. In terms of investor experience, they're a little bit stricter eligibility criteria for new and experienced investors. However, I do have some alternatives for the newbies that, if you do have a primary residence and maybe, some other properties, we can kind of throw that in the mix and use that. Or even if you have some experience with fix and flips or ground up, we can kind of be creative in that aspect in terms of showing that, you do have a strong resume to qualify for these loans. Now, the minimum loan amount it says here 175, but between us, I mean, we can go down to 75K. Anything under 75K is tough. You're not going to really find that. And preferably the 680 score for FICO is needed. 680 is kind of the marginal, but again, I can go down in some instances to 600. I got one source that it's a private source, and go to a 500, but you probably be looking at 50% LTV, putting 50% down, or only able to pull out 50% cash. So it's kind of case by case, but for the most part, this is the gist of that particular requirement for that product. Now, when is a DSCR loan a good idea? Well, to me, it's a good idea if you're looking to buy any kind of investment property. Why would you want to provide all the documentation if you don't have to do it? It can allow you to not. One thing I will say as well about the DSCR loan, when you go on with my programs, because I do private money, is the beauty of that is it does not show on your credit report. And that's huge. So I hope you're taking notes, because note takers are money makers. And I'm sprinkling y'all with a little bit of knowledge that I can share and some nuggets, but being able to not show this on your credit report is a game changer. Why? Because it won't affect your debt to income ratio. And it's some other tricks that we can do as well on the business loan side that you can use to leverage to pay off debt on your personal, so that your debt to income ratio is really low. So if you're an advanced investor with multiple properties, DSCR loans is definitely worth considering, especially if you're a portfolio kind of customer, because a lot of my investors, they're very seasoned and they have portfolio loans. And this is basically a generalization of our DSCR product. I mean, we have different variations, but the one I lean on heavily is the portfolio product, and mainly because I can go more than 10 properties, but for the most part, 10 properties is kind of the median. 30-year fixed terms. We offer ARMs. The ARMs are really not performing as much as the fixed rates are. So most of my clients go into a fixed rate like a 30-year ARM. We just did one recently. It was 10 properties. It was in Georgia. It was it was only like 600,000. So a lot of people don't like doing small loans, especially when it's a bunch of properties that are 80,000, 100,000, but we'll do them. And she got a really good rate. She got about, I think it was like 8.5, and that's with no income. So that sometimes my private money rates outperform the rates on the traditional side and most non-QM lenders. We can offer interest only up to 10 years. As I mentioned earlier, we also have 40-year options available. 40 interest only is that a lot of my investors love, and we can do loans up to 3 million. And as noted, 80% LTV, 1 to 4 units, but we can go higher than that. And then on the single family side, it just mimics the left and the right, same type of product. Now, what's interesting about the multifamily, if we're doing 8 units, I think this property here is in Nebraska. It was one of my customers, our teammates pulled this up for me, but I think this is either an 8 or 12 unit building. I can't remember because we do so many of them. It was definitely in Nebraska. It's a snow. So this particular property, I think we highlighted because the cash flow was so enormous. I mean, I think we did a loan. Maybe I think our payment was 7,000, 8,000, but her cash flow on it positive was, I think total gross revenue was like 15,000. So it was definitely cash flowing. And you can find pockets in America where certain markets perform better than others. This particular investor, she likes Colorado and Nebraska. That's not my preference. I do a lot of business in Colorado though, and the Midwest, and certainly in the South. So it just depends. I'm sure we have people all over the country on this call, so you may can identify with your market for these type of deals. Now, in terms of being creative with my DSCR product, you can be very creative. What I mean by that, again, I use simple numbers. If one of my investors, they will do a 65% loan, okay, so 65%. The seller can carry a note at 25%, and then you can come in with 10, right? So the minimum loan amount is 75 now, so we got to be careful. But if you were to do, a loan for like 150, and then you get 65% of that, and then the seller, who is flexible, gives you 25%, then you only have to come in with 10%. So that's a game changer, because now you got a great property and you only put 10% down, and the seller is carrying 25% of it. So you're only financing, the 65% through the lender, 25%. If you negotiate terms, most of the seller carries you can get at 0%. You just basically just paying it off when you do it, right? So the 10% that comes out of your pocket, we can leverage. And that's what we're for the transition now into more of a business credit. Now that you have a basic fundamental understanding of DSCR and some of the creative ways we have, now we can merge in the business credit. Now, business credit is something that most people don't really understand. It's a unicorn. What is a unicorn? A unicorn is something highly desired but difficult to find or obtain. I've been in loans for, over 20 years. And, I've heard stories about Dun and Bradstreet, the magical 80 paydex score, Well, the truth is you only need about 5 trade lines to get an 80 paydex score, and in most instances, you still have to PG, meaning that you still have to get your credit pulled in order to qualify for these type of loans. So it is a unicorn because most people know and they don't know how it works. Well, I'm gonna shed a little bit of light on it, not to change the whole presentation, but I feel like this is important in this new wave of in the marketplace. I feel like you got to have an understanding on business credit from a real estate standpoint because it's getting really tough out there. So if you do have some business credit or at least have a fundamental understanding on how to set it up, it's going to pay off for you. And speaking of fundamentals, I played football, played at Miami of Ohio. I played with Big Ben and a lot of different players. And I remember, when we're doing well is great, but when we lose a big game or you have a bad play or it just wasn't a good series, you got to get back to the fundamentals. A lot of people apply for business loans and they fail because they may have got a credit card and, now they're shooting for that 100K or that 200K and they don't get it. Well, they may have just forgot the fundamentals. Let's just get back to the beginning. It's very simple. We want to make sure that the business is set up correctly. And this is key because most of these DSCR loans, they're really called business loans. I mean, when you close on the DSCR loan, you close in your business name, in your LLC. So the two coincide with each other. The only difference is you're just closing in the LLC's name. They're not using the business credit calculation and for you to qualify. Not yet, because I feel from my experience, I think that the system is going more toward a SBA type of model to where they're blending the credit scores with your business score. So it's going to be a hybrid, but that's neither here nor there. It's not here yet. But we're talking about the basic business setup. You want to have a business entity, okay? And I'll throw you a gem here. If you have a business entity, you want to be careful on the name, on how it's set up, and you also want to be wise on how it's set up. Obviously, a sole prop, at your own risk. I mean, that's on you. All the liabilities on you. I recommend LLC, S Corp, or C Corp if you're going to set up your business entity. And I would also say take special note of the name of your business. All right. I'm not going to say you cannot get lending if you have a real estate or an investment in your name. I'm just going to say it's probably a high probability that you're not going to get approved. All right. So you take that as what it's worth. But, if you got a service company, consulting company, that puts you in a little bit less risk. Let's say that. And then obviously you need an EIN number, so you can have that. And all this data must match. What's interesting about business credit is that it's not like the Fair Credit Act. They don't have that to where you can dispute addresses and phone numbers. You need to have this stuff correct the first time. And I'll explain why a little bit later. Then you want a DUNS number. That's pretty simple to get. It takes maybe 3 weeks to get a DUNS number. You can just go to dnb.com and Dun & Bradstreet, and you can get that. Address. This is key because the game has changed a little bit. Before, when you had a home address, it didn't look good. However, since COVID, things have changed. And then since the ridiculous amount of fraud that's out there, banks are kind of changing their philosophy regarding this address. It still do not have a P.O. box. All right. Do not have a P.O. box. That's not good. Or a UPS store. However, some virtual offices are good. It's nothing wrong with just getting a brick and mortar though, just to play it safe. Spend $700,000, $800,000, whatever it costs. I mean, you're looking for real money, right? We're talking 100, 200,000 is what I normally give my clients. You need to have the basic fundamentals in order. The days of just having, virtual office and things of that nature, just trying to do a shelf corp, they're coming to a quick end. So you want to have a address. If you don't have a business address, use a home address. There's nothing wrong with that. I think at worst, you'll be able to get a lot of credit cards that way. And some of my credit cards I give my clients are between 50 to 100K. Me personally, depending on the situation, I like to use the business credit cards, especially at 0% interest, because I can take the money off the card and use that for my 10% for down payment. There you have it. If you're looking at a $200,000 duplex somewhere down south or in the Midwest, and you got a seller who's extremely flexible, then you can get 65%. You just need to talk them into 25% carry, seller carry. We take the 10% off the card. There you go. Now on a property like that, you spend $200K on. If the rents are, say if you're getting $1,500 a pop, then that's good cash flow. And now you can service the loan, and you can service the credit card debt that you use to make the payment, to service the debt. So that's what we're talking about, the creativity. So, a lot of this will say, you may say, well, hey, Cory, you want me to find someone that has that's desperate and they're out there. All right. And if not, just pay the 20%. It works. You can use 20% the same way. But, I'm looking creatively from the theme of the course here is, we want to be creative and outside of the box. Bank accounts, very basic. But you'll be surprised how many people come to me looking for funding, and they want 100K and they got accounts negative, or even less than $1,000, and it doesn't look good by the bank. I recommend having at least $2 to $5 grand in there just for show money, at least to have it in there. And then emails, stay away from the Gmails. Have a professional site, professional website. Spend the money because banks are looking at that, and it's important. Again, it's presentation, your phone number. Cell phones is good. It's always good to have a hard line. If you can register with 411, it just improves your probability of getting the funding. And some industries that you want to stay away from, I mentioned a couple earlier, two that are not on here. Obviously, real estate, I'm not saying that it's not going to be funded, but I'm saying it's going to be difficult. And, anything with investment, it can be a little challenging. Trucking, however, is kind of on a bubble. I have some banks that still will do trucking, but this list here is just a few of the very restricted for obvious reasons. Ammunitions, weapons and manufacturing, bail bonds, energy, oil trading, check cash agencies, gambling, and finance companies. So you may say, well, Cory, how you getting money? Name you probably fall under that finance piece. Well, I got other LLCs, right? So I probably will be limited in my business lines, but I can get some credit cards. I can probably get like 100K in credit cards. You know what I mean? I've raised money with my own company as well, but I have other LLCs as well in my strategy. So it's always a way around things, based upon how you set up your court. The big three, just touching on this a little bit. Dun & Bradstreet, Equifax, Experian. A lot of these companies have been around from the 70s. We know Equifax and Experian mostly from the consumer side of things, but they do have business credit as well. With Dun & Bradstreet being, everyone knows for the business credit, but it's ways that you can set up your Dun & Bradstreet so you can get an 80 Paydex score. And all you need is 5 accounts to do that. It doesn't take a lot to establish business credit. And I'll give you 3. All right, I'll give you 3 for free here. All right, so you got Uline, Creative, CO Creative, and Supply Works. And the reason I chose these guys because they're pretty simple. I mean, Uline has been around forever. When everyone was going out getting the high Paydex score, because the only thing you need to do with Uline is to have your entity in good standing, EIN number, business address, DMB, business license, business bank account, listing in 401, and we set up a net 30. You're off and rolling. If you buy some igloos or whatever you get, you can do that through Uline. And these are very similar with these other 2. So here goes 3. Here goes what you need for Uline. That's exactly what you need. So you got 1, so you can get your net 30 going and get on your way to having an 80 Paydex score. Not a problem. Now, one of the things that most people don't know, and if I could see a lot of faces, I would ask a show of hands who knows about the SBFE. Not a lot of people know about SBFE. SB stands for the Small Business Financial Exchange. And this is where all the banks talk to each other. This is a nonprofit organization That's kind of a secret society that's not necessarily advertised by the masses, but it's a co-op of banks, vendors, and institutions, lending institutions that they share data. And it works like this. So you have let me pull my pointer out here. All right, so it works this way. So you start here, okay? And then step two is, you got the small business financial exchange members, which are consist of lenders, and then you have the SBFE normalizing the data. So here goes the lender, they share the data. That's kind of their point of entry. They come in, they share the data here, they contribute, right? So you come in the game. What's the cause of why you're in here? Well, I have information, I have application. So say for instance, use Wells Fargo. Wells Fargo's here. They come in this. They're going to share the information on your bank account, on your application, what you stated on your app, all that information. Then share it with companies like, Dun and Bradstreet, Equifax, Experian, LexisNexis, who many of you may understand. These are all aggregates that take the information, all right, and then they share it with the bank. So Wells Fargo, Chase, PNC, a lot of the banks, they're all sharing this information, right? So this is why some of y'all don't get funded if you're going through brokers, because one broker may put that you make $1 million on the app, and with Chase, and then with Wells Fargo, they put that you make 500,000. All this information is getting shared on the back end, and you'll get it. Well, it won't be the sole reason for decline, but it will it's conflicting. So you can figure that out. It's common sense. So this is kind of the network, the good old boy network that a lot of the banks are using, and SBFE is behind the scenes, and a lot of banks are using it. So you want to get familiar with this process, because this is to get any type of funding, you're going to have some type of business credit in the future, in my view. All right, and then just real quick here, 10 of the 10 U.S. business card issuers, they use SBFE. Over 40 million small businesses are set up with them. Been around for 20 years, so that's a lot of data. 98 million accounts are represented. Top 10 commercial banks are SBFE, and 135 plus members. So it's a big deal. And these are some of the lenders, right? I mentioned earlier, Wells Fargo, PNC, a lot of these regional banks, you may be familiar with. A few of these are, credit unions as well, but, they all report there. And simply put, the richest people in the world, they look for, the rich people in the world, they look for and build networks. Others look for work. That's from Robert Kiyosaki. So you building a network, if you put me in your network, right, you use Omni, it's going to put you on the path to success, because we can creatively finance all your deals. We can get you the business loan to get the funding so that you can buy these properties. And, it establishes yourself in the marketplace as an investor who's actually doing it, not just talking about it, but actually doing it. And hopefully some of these tools that I'm presenting to y'all today that y'all can use. So here's my information. You can reach out to me through any of these handles. And now, I like to open it up for any questions. I do have a few minutes here, so I want to answer any questions. If you want to throw some scenarios at me, go ahead. Let's shoot.
Thank you so much, Cory. I really appreciate you coming in and educating us on these special types of loans that we can get for our real estate investment needs. So we are opening up the floor for Q&A. So thank you so much. Anybody who has questions, please raise your hand. Let us know what questions you have. And we do have questions in the chat as well. So I'll go through those questions in the chat. So let's see here. What was the first one? So somebody was asking about the down payment and it being 20%. So can you elaborate on that?
Yeah, so if we're, looking, if it's $100,000 property, then you need $20,000 to get engaged on that deal for the DSCR product. So, unlike a single family home, you need 3% through FHA or 5% conventional, or 10% bank statement program. You don't have to provide any income documentation for this product, so it's more riskier. Therefore, you have to have a little bit more skin in the game. So you need 20% to put down. So, and that's that example of 100,000. If you're trying to buy a house for 100,000, you would have to put 20% down, which is 20 grand. If you're looking for a $200,000 home to buy, then you need 40 grand plus closing costs, of course. But that's the down payment requirement, if I answered that correctly.
Thank you. All right, and Jay has a question. Jay has his hand up. Go ahead, Jay.
How you doing, Jay?
Hey, hey, how's everyone? Good evening.
Good evening. Doing good. How are
I have
you?
doing great, thank you. So I have a question. Thank you for sharing the information. I wanted to know liquidation. I heard you mention that you can liquidate your credit card. What method of liquidation do you use?
Well, you can do merchant account. I mean, it's a lot of different ways that you can liquidate it. There are companies out there that would allow you to liquidate specifically for real estate that go through the title company, and you can just easily Google them. It's not a secret sauce or anything like that. If you Google real estate credit card liquidation for real estate, you'll have it. And the name of one that comes off my hand, but I'm old school. If you got a business, you got a business and you got a merchant account, I mean, it's ways that you can do that. So that information is not hidden. Some title companies even can tell you how it's done. They're investor friendly, so it's not like against the law or anything. It's public information on how you can do that. So it's several ways that you can do it. You can either do a merchant account or some of these other companies out there that do that.
Thank you.
I'll give
Mhm.
an example because I have liquidated credit cards several times. And what I do is just I keep it within the family. So like my brother has a business, he has a merchant account, he has a PayPal. So he'll send me an invoice for whatever amount that I need to take off my credit card. I pay the invoice, the money goes to his account, and then he will either Zelle or wire it to me. So that's one way that I have used to liquidate my credit card for real estate transactions because I've been flipping properties since 2015. And listen, when you need to take money out and you can't pay for certain things with the credit card, then you need to find ways of liquidating. So that's a really good question. Thank you, Jay.
Thank you for that information. And it sounds like I could potentially use like a Venmo, a Zelle, or a PayPal, something like that, if it's
Yeah, like
attached to a business account.
yeah, so I have used like even like with my Amex card, I've used I think it's Venmo. I use Venmo or something like that. They let you use credit cards, but they have like a certain limit. So you might want to use one of those merchants that don't put a limit because sometimes these if you use Venmo or Cash App or one of those, they'll look at it as a cash advance and they'll limit you. So that happened to me with Amex. So I had to go another route and use a merchant.
Okay. Thank you very much. Thank you both.
You're welcome.
You're welcome.
Sylvia has a question and then I'll go back into the chat. Sylvia, hey, how are you?
Hey, I'm all right. My question is, I don't live in the US. I live in Canada, and I'm wondering if I would be able to qualify for financing to purchase real estate in the US. I don't know, I don't have a US bank. I have a TD account in the US. I don't know. So that's what I'm wondering. I'm wondering, do you have to be a citizen of the US?
No, I have a foreign national program for investors. If you got a tax ID number, a 10 number, then we can get you qualified for it. So
Okay.
or if you have a work visa, but if you're in Canada, you can be a foreign investor. We can put you in a foreign national program. Very similar process, 20% down, maybe 15% down in some instances, but it's pretty safe to say 20%. So you can get DSCR without a social here.
All right. Perfect. Thank you.
You're welcome.
That's awesome. Thank you so much for asking that good question, Sylvia. Next we have Giovanni. He asked, Do you have lenders that doesn't do the asset verification for down payment funds?
Yes. So it can, in conventional world, you get money from gift, you have to source the funds, you have to, track the money where it's going. You just need to have the money available when it's time to close. So you don't have to source the funds, or it doesn't have to sit in your bank account for 3 months. You just have to have it ready to close. So you can literally have it the same day you're trying to close.
Awesome. Thank you, thank you, thank you. Next we have LaShante Williams. Hi, LaShante, how are you?
Hi, I dropped a question in the chat as well, but another question. Oh, shoot. Oh, my other question was, when do you suggest we reach out to you, Cory? I actually had a situation where I got a lead on a property yesterday. They ended up selling it yesterday as well, though. So, but I was really, looking at the numbers and vetting it and then thinking, okay, now where I'm gonna get this money. Oh, so do I need to reach out to you in advance and let you know, hey, these are some of the things that I'm looking at, and we discuss some of the options? That way, say I get another, opportunity that comes up, I'll know the direction that I need to move in.
Yes, I would recommend, sooner than later, right? So I like to set up my clients with their own investor profile. So that, because I look to do volume. I don't want to, I'm not a transactional type of lender. I'm a relationship lender, right? I want a network of like-minded individuals who are really trying to make a push. So if I understand your investor profile, let's pre-plan, right? Let's run some numbers. So then when you are seeing a deal, you got a specific criteria that you're looking for, and we already got that in place. So because like you say, a deal is here today, gone tomorrow. So if you're in the market, we need to get the financing squared away now. So you don't want to wait to get the deal to try to find that financing. You want to already kind of at least have the base level. So, okay, Cory, I'm ready. I got my checklist. I see this property. I want to put an offer in. We've already game planned and strategized on how to approach it when the opportunity, because opportunity knocks is gone. You know what I mean? So you want to stay ready. So I recommend definitely reaching out to me before you go seek the property.
Awesome. I'll definitely give you a call tomorrow I'll call you tomorrow to schedule a consultation. Or is email
Okay.
better? Like, what do you prefer to schedule consultations?
Well, you can, I think, Christine, you have a link. She's going to put the link on
Yeah,
there.
I put the link in the chat, but I'm also going to put it again just in case you wasn't here. And this is the best way to get in contact with Cory. So he'll get your information instantly and reach out. So you can go ahead and fill out that link now with your contact information, and Cory and his team will be in contact. All right. Thank you, LaShante. So next we're going to go with Hassan, and then we're going to go back into the chat. So if you have any questions and you don't want to raise your hand, you can throw it in the chat. We have a few more minutes because we need to be mindful of Cory's time. So, hey Hassan, how are you?
I'm doing great. How are you?
Good.
Hey, Cory, I wanted to know, is the funding strictly for investing into US properties? Because I'm more so invested into real estate overseas. So I just wanted to know if you have like an international program, or how does that work?
Currently, it's in the States. I mean, Costa Rica is kind of the, only outside source I have. I do have some sources for like Jamaica, but I would say it's pretty much in the States. I'm really not abroad yet. We're talking to some investors on some equity plays with some equity investors, but those are, more like land development type deals. So currently, no, sir. I don't have anything abroad.
Okay, thank you.
Mm-hmm.
All right, perfect. Another question in the chat. Cameron wanted to know if you said rent rolls for 12 months and a lease agreement.
Yes, 12-month rent rolls and lease agreement. So both. I like to just have, because Most of the time I will only need a lease, but if we're talking like multifamily, they want to see that rent roll. So leases and rent rolls.
Okay. Next we have Yvonne. Hi, Yvonne. How are you?
I'm fine. How are you?
Doing wonderful.
Oh, great. My question has to do with land development. Is there a specific or a different strategy other than using the DSCR for, let's say, for example, tiny houses, putting properties up? Like,
Okay.
Love tiny houses.
All right. So to answer that question, as far as land development, I do ground up as well. So, if you have you bought a parcel or a piece of land for say 50,000, and then you need the renovation cost to build whatever structure you would like on that property. Say if it's 250, then we would either finance the land and the construction, all right, which is they call vertical and horizontal. Or if you already purchased the land for cash and we need to go vertical, which is only the building portion, then we can do that as well. So I have more expertise in that than for residential versus commercial. However, we do have some commercial sources as well for construction, because that will fall under our construction leg. So we definitely certainly can help you with that.
okay, so the best way to communicate with you is to call on this versus your email. I missed your email. I needed to get that.
Okay.
Okay. I'm going to put the link in the chat. So the best way is to click on the link, put your contact information, and then Cory and his team are going to reach out to you.
Okay, I appreciate it. Thank you.
You're
Yes, ma'am.
so welcome, Yvonne. Thank you. So somebody wanted to know if you need a cosign for a business credit card.
Well, for the business credit cards, if you typically need to have like a 720 score. So what I would recommend versus a cosigner is, you partner up with someone. A credit partner is the term that we use. So, if you know a friend, a family, and you guys work out some deal, then you basically just use the credit partner to get the funding, and then you guys work out the deal. If you're using this for real estate, they got good scores. They can pull 50K down. You have a property, you can kind of do a JV, joint venture, and kind of collaborate, and you can use that as a creative option to get into real estate. I'm assuming that's the reason of the question, but I'm not for sure. But co-signers, if you have someone that has a good score, then yes, we can use a co-signer. Or I would say versus a co-signer, just put it in their name totally. Because they still gonna look at your credit, and your credit may bring the file down if you're not at like a 700, 720 score.
Thank you, Cory. So Annecy wants to know, can he use his existing home as a down payment, or is that not recommended?
All right. So what a lot of my customers do, if they have a property that is, say, free and clear, I just use that, I can refinance that property, pull out the money, and then we take that money and then we go and buy another property. So yes, you can take out a loan on your primary residence and use that money to buy investment. I hope that I answered your question.
Perfect. Cameron wants to know, what all do I need for a $1.8 million building, T12 rent roll lease agreement? What else? He wants to know what else does he need?
All right. So, and this is a purchase or a refi?
I believe so. I don't know if Cameron, if you want to come off mute.
All right. So, yeah, Cameron, if you could enlighten me, because there's two different ways to look at that. If it's a purchase, obviously we need the purchase agreement, and the seller will provide the rent rolls as well as the lease.
Yeah, that would be a purchase.
Hold on, sorry.
I ain't know them boxes.
Okay, go ahead, Cameron.
Yeah, that would be a purchase. I'm looking at a purchase. I'm looking. It's a 24-unit building.
Okay. Yep. So rent rolls and leases. and 20% down.
Okay, rent. All right, rent, and if I can get the seller to do owner financing on that as well, then you have to come with 10% down. Or if I can
You
get
own it,
a
Cameron. You own it, man.
yeah,
Yep. That's how you
right,
want to
right,
do it.
yeah, okay, and I can get a someone else to sign for the debt as well, right? Key
Correct. You just
player,
cut them in the deal.
right?
Give them some
Okay,
equity, or give them a
right,
piece
right.
of the cash flow.
Okay, so if I give this guy an LOI tomorrow, then I need to forward you the documents as far as the leases, the rent rolls, and the T12, right?
Correct.
Okay. And then I guess you would do the evaluation as far as how much you all could lend on that building. And
Yep.
that would
I
be
get it
under a
pre-underwritten
DSCR
for
loan
you.
as well.
Yep. It's under 5 million, so we'll run it as a DSCR product.
Oh, cool. And you do the say that last part again. You say you do what now? The underwriting?
Yeah, we'll do it as a DSCR product because it's under 5 million, so you won't have to provide any tax returns or anything like that. You just give me the rent roll, and that's it, rent roll and your leases for that building.
Okay, so I would need all 24 leases of each unit then, right?
Yep. And his rent roll in the T-form, it'll show it all on one shot.
Right, right. I got the offering memorandum right here, but so I got some of the stuff. Maybe I could scan it to you or shoot it over to you in the email tonight.
Yeah.
Would that be possible?
Yeah, that'll be possible.
Okay.
Christine, I don't know because I can't receive anything because of the link. You can just you just fill it out. It's like an app. So I don't know if they can send it to you and send it to me kind of
Do you
deal
want
here.
do you want me to put your email in there? Or do you
Yeah,
want to
go
put
ahead. Put my
in the
email on
chat?
there. Yeah, that's cool. Yeah.
Which you want me to put Cory at Omni Funding? You want me to put that one?
Yeah. Yeah.
Okay,
Cory at omnifunding.com.
okay. All right, I'll put that email in the chat for everyone. Are you ready for the next question? I
Yes,
think we
ma'am.
have a few more questions. So, hold on, I lost it. So the next question is, are there any programs for vacant land?
Yeah, for if it's residential, all right, it's a little bit tougher. I mean, it's easier to get residential vacant land. If it's industrial, like commercial, it's real tough. So I would say if you're looking for residential land, we're probably at 50 to 65% loan to value. The secondary market land is not really performing. But but it is possible, but it just takes more cash to acquire it. And a lot of people, that's why they just pay for it cash. But you're going to look at 50 to 65% down for some residential land that's non-industrial. If it's industrial, that's tough.
All right, next we have Sean. Hey, Sean. Hey, Sean. We can't hear you. I think that you're either on mute. I don't see that you're on mute, but we can't hear you, Sean. All right, so we're gonna go to the next question until you fix your audio. So the next question is, are you able to move from conventional to DSCR prior primary residence turn investment property?
So the property, I'm assuming, started off as a owner occupied single family home. And then I'm assuming that then you have a renter in there. So now, yes, because it's a rental. Now we can use DSCR if you want to, take out some cash. As long as you own the property, and I didn't mention this early because I do this with a lot of my fix and flip people. They'll buy a property, okay? They fix it up, All right. They get a bridge loan. I give them a fix and flip loan. They'll hold it for about at least 90 days. And then I flip it out to a DSCR loan and cash out. Now they got the money back they put into it, and it's lovely. So yes, we definitely can convert conventional to DSCR loans from an investment standpoint, if it's an investment property. I can't do a DSCR on a primary, but if it's a investment property, sure, we can.
All right, perfect. Sean, are you still with us?
Can you hear me?
Yeah, we can hear you now. And I see your question in the chat. So is it the same question?
Yeah, it's the same question. I just wanted to
Okay,
know.
go for it. Go for it.
I already have some land that I purchased for residential. Did the land clearing, pretty much shovel ready. What would be needed for the loan? Like, is there the deposit needed? Do you finance that portion because I already own the land, or how does that work?
Is it permitted? Is the plumbing, electric, and all that done?
So the permits are in the last phase of being approved. I just had to do a record plan modification, but I have all of that approved, lines and grades, architectural plans, everything is done. I just got the word that it's going to be approved probably within the next couple of days, so I'll be ready to break ground. So at that point, everything is pretty much ready to go. So what would be needed as far as the financing for the bill?
I just need your budget. I just need your budget. So you can email me, and then I can because I think on the link it's only DSCR, but if you go to loans.omnifundingsolutions.com, you can choose between fix and flip or ground up. But in your situation, you already got the land, we'll just be going vertical. So whatever your budget is, if it's 250, 350, we'll just give you a percentage of that, of your, well, we finance 100% of the budget. So depending on your experience, have you done these type of projects before?
Yeah, I've had quite a few ground ups. That's mostly what I do now. So yeah.
Oh, perfect. Perfect. So Sean, I got a good product for you. Depending on your experience, sometime we can defer your interest for 6 months, 3 to 6 months. I don't promise that, but that's an option that a lot of people they love, because now you don't have any payments until the property. What's your exit? Selling, or you buying and holding?
Most likely going to sell it once it's done because of the equity that's going to be there.
Okay.
So some of my previous lenders that funded my deals, that's what they usually do. They'll give me like 3 to 6 months where they'll, you know, I don't have to worry about as I'm building. So I just wanted to see if that option was available also.
Absolutely. Absolutely. And it's in-house. So if you're in that game, you know, we're looking for guys like you. So definitely let's connect.
Okay,
I'll
definitely.
make sure
I'll reach out. Okay, appreciate it.
Yes, sir.
All right. Thank you so much, Sean, for that good question. The last question that we have is, which credit bureau for 700 or middle score?
Well, it depends on the product, right? If we're talking fix and flip, anything real estate related, they're going to use your middle score. We're talking about business loans. It just depends, because depending on the bank, I strategically choose which, I know each bank, what bureau they pull. So if it's an Equifax lender, we'll go with the Equifax lender if that's your highest score. So I don't know which product you're saying, but if we're talking real estate, we'll use the middle score. If we're talking business loan, to get money for the real estate project, we will use most likely Experian, TransUnion, depending on what your highest score is or what your situation, because you may have a 640 Experian, but a 680 Equifax, and then a 720, you know, TransUnion. So we'll just use TransUnion lenders, you know, because you got the higher score there. So just situational.
All right, perfect. And last, LaShante said that she's getting a 404 error. So I'm not sure what's going on. LaShante, you want to come on? Yeah, like I guess it loads, but
It's really just a logging in. So I was able to sign up for it, and then it said my password was wrong. I changed the password. It said 404 error. So I'm not sure.
Is anyone else having that problem?
So you were actually able to set up a profile or an account?
Yeah, I set up the profile, but I wasn't sure what the next step was. I figured I needed to log in. So when I logged in, it didn't take me anywhere.
Let me see something here. I can show y'all what it looked like. Let's see. 1 second. Because I'm trying to see. So are you looking for the put this in the chat for me, Christine. If you can put loans.omnifundingsolutions.com and you click on that, and then you can choose like the single family for DSCR. You can use ground up. You can use a lot of different tools there.
Loans.omnifundingsolutions.com, right?
Yeah. LOANS.omnifundingsolutions.com. Yes, ma'am.
Okay, perfect. I put it in the chat.
Yeah. So when you click on that, is this Miss Williams? No,
Yeah.
Okay.
Yeah.
So when you click on that, it'll give you options, right? You'll see fix and flip, ground up, single family, and portfolio. So for the DSR, you click on the single family. For the portfolio, obviously you do that ground up or fix and flip. You'll have that option in there. Sorry about that link. I just don't want anyone having the same issue. So that's the simplest.
It could be the browser too. Sonia said that she set up her profile with no issues and it verified her email.
Okay.
Cameron said, tell her to try to go back in. Sometimes that works. So, yeah.
All right. So I'm assuming that the people they're clicking on the link and then they're filling out the information and giving their choices of the product or that specific product. Because or are they setting up the affiliate link?
Yeah, I think they're setting up
The first thing was the Barrett Financial setup. So I don't know. My initial thing was just to try and get in touch with you to schedule a consultation. So I don't know which one I'm supposed to do.
Okay. So, all right. So you got a Barrett Financial one?
Yes, that's what that was.
All right. So Christina has sent you later a one for Omni, for the DSCR and the business loans. If you don't have that, then you can just go to loans. You can just go to loans.omnifundingsolutions.com, and that allow you to put your application in, and then with your contact information, and then we can set up a time to talk. So
okay, that works.
About the confusion
I just pulled that up on my computer. That's fine.
Okay.
Thank you all.
All right. Thank you, Miss Williams. Chanel says, if you already have a property, just need funding with fix and flip. So I guess she already has a property. She just needs funding for the fixing and the flipping part.
Yep. So what we do with that is that's a renovation loan. So we would just do fix and flip. It would be under the fix and flip model. And depending on what your renovation is, we'll just finance. And if it's a total gut, whatever your budget is, I just need to know that, and we can finance that. So you can fix and hold. Fix and flip is just a general term. You can hold it still, but it's basically just a renovation loan, but it's under the fix and flip module.
And Reginald said, if you already purchased the land and the down payment is a down payment needed for the loan to build on the land?
No, because we'll give you, if you already got the land, then we're just going to finance your renovation, your budget for the vertical. If you are trying to buy the land, we typically will give you 75% of the purchase of the land, and then you have to finance the 25%. But the good thing about land is it's not very expensive. So, if you're looking at a lot between, 100K, that's a pretty good lot. I mean, most lots that I've seen, and most people give 50 to 75. So we give you 75% loan to cost in most instances if it's unpermitted land, meaning that you don't have the items that Sean talked about earlier. He's already in a permitted stage. So it's a little bit different than just coming in and having no permits or anything on the land. That would allow you, yes, you would have to come in with some money on that scenario.
All right, perfect. And then the last question, Cameron says, can he send over the OM that he received from the broker and you could look it over and get back to him?
Absolutely.
So yeah, so Cory has his email inside of the chat, you guys. So please get in contact with him. You can get in contact with him at Cory@omnifundingsolutions.com. Okay. So with that being said, we are going to wrap up the masterclass. I do want to say thank you so much to Mr. Cory Walker for coming in, for giving his time and his attention to the community and pouring into us and letting us know how we can acquire these pieces of real estate and build our portfolio. So thank you so much, Cory, and we hope to have you back over here with another masterclass, giving us these tips and tricks on creative financing and building business credit. So with that being said, everyone have a wonderful, amazing evening. And if you want to watch the replay, go to our YouTube channel. So it's 7 Ways to Wealth. The number 7 Ways to Wealth. That's our YouTube channel. And you will be able to watch the entire replay of this wonderful masterclass. And if you are not able to save Cory's contact information, please text the number that you received this link from, and then we'll be able to get you in contact with Cory. With that being said, everybody have an amazing Tuesday and the rest of their week. God bless you, and we'll see you on the next masterclass. Bye.
Thanks, guys.